Good afternoon, everyone. Hope you all have full bellies and are ready for a fun, exciting conversation this afternoon. So welcome to Breaking Boundaries, how innovation is supercharging industrial real estate. So today we're going to explore innovation, data, emerging technologies, and how they're shaping the future of the sector, how investors are identifying opportunities, to how buildings are designed and how portfolios are operated more efficiently. My name is Marcia Minton. I'm Vice President of Asset Management for Wheelhouse Capital Group, and I'm super excited to moderate today's panel. First, we'll start with a discussion amongst the panelists, and then if the time allows, we will open it up for questions from the audience. So before we jump in, I'd like to briefly introduce our panelists. Each of them brings a very different perspective across innovation, venture investment, operations, and technology within the real estate, industrial real estate space. So, Matt, I'm going to start with you since I have my list here. First, we have Matt Chow, Senior Vice President of Strategic Innovation at Link Logistics, one of the largest industrial real estate operators in the United States. Matthew leads a team focused on identifying emerging technologies and strategic initiatives that help future-proof Link's massive logistics portfolio. So, Matt, tell us a little bit about what you're doing at Link.
Yeah. So Link is sort of a big portfolio, US focused, 500 million square feet. Fun fact is I always enjoy is that roughly 5% of the US economy runs through our warehouses. So we're a scale player, and our team is really focused on future fitness. There are really three things that we do. The first, we call it signal scanning, is just looking at different trends and shifts in the sort of 5+ year horizon that we think will affect real estate and making sure we have a house view on how we want to prepare for that. The second is vetting the many ideas in that changing landscape that come across my desk in terms of things we can do to serve our customers differently, and vetting that with rigor. And then the third, a subset of that, when we focus on our biggest bets, is launching and pursuing new ideas, whether that's new offerings or internal tools that are particularly big bets. One of our biggest focuses is around intelligence and predictive analytics, which I'm sure we'll talk about more.
Yeah, absolutely. Well, thank you. Next, we're joined by Ryan Botwinick. He's the CEO and co-founder of Fyxt, an AI-powered property operations platform built specifically for commercial real estate. Ryan founded Fyxt after seeing firsthand how fragmented systems and manual workflows were creating operational inefficiencies across large real estate portfolios. So Ryan, I'd love to hear what you're doing at Fyxt.
Yeah, thank you for having me. Hopefully everybody can hear me all right.
Yeah.
Founded Fyxt about 7 years ago. We're currently operational in about 1.5 billion square feet to date. We are, coined, internally as the AI operating system for commercial real estate. And what we look to do is vertically integrate the tech stack and automate business processes to reduce OpEx and CapEx for our enterprise clients.
Nice. Well, thank you very much. Look forward to having you add value to the conversation. Next, Ray, I'll move on to you. Ray Oakley, Investment Director at Prologis Ventures, the venture investment arm of Prologis, the largest owner of logistics real estate globally. Ray focuses on identifying and investing in early stage technologies and advanced innovation across the logistics and supply chain ecosystem, and focusing on sustainable practices. So Ray, why don't you tell us a little bit about what you're doing?
Yeah, I think you actually did it perfectly. I'll just say I'm the vulture capitalist in the room here. My goal is to find opportunities for Prologis to invest in companies that will give us an outsized advantage, thereby helping those companies grow. And so there's a fun discussion between how do you underwrite strategic value to working with technology companies versus financial value. My managing director loves to say that there's nothing strategic about losing money. So we're always trying to find those good deals. But really where I come at this from is, what does the tech landscape look like today? Spoiler alert, a lot is happening. And how does that impact how real estate owners are thinking about their industrial properties?
Very interesting perspective to share to the panel. So thank you, Ray. Next, we'll introduce Barbara Ray. Barbara is the Chief Operating Officer of Arden Logistics Parks. She has more than 25 years of commercial real estate experience and has played a key role in building Arden's vertically integrated industrial platform, which has grown to more than 11 million square feet across multiple markets. So Barbara, tell us a little bit about what you're building at Arden.
Well, we're very different than Link and Prologis. So we focus really not on the big box, but what we call shallow bay, light industrial. So my average tenant size is much smaller than theirs, although you have Link Parks, and I'm probably a little similar to Link Parks, but my average tenant size is about 5,000 square feet. So I have a different kind of set of problems that come with that. We're not building any assets. We are buying existing product. So minimal on the environmental component because we're not starting from the ground up, and we're doing minimal capex there. But we manage a portfolio that's 11 million square feet, but we have 1,500 tenants. So very heavy on the tenant side. There's a lot of leasing velocity, property management, intensive nature, which requires a lot of systems, tools, and technology so that we can manage it.
Great. Well, thank you all. As you can see, we have a really strong list of perspectives here to cover. So let's start by zooming out for a moment and setting the stage. So industrial real estate has been one of the most resilient and rapidly evolving sectors over the past several years. Between shifting supply chains, rising energy demands, and changing tenant expectations around speed and automation, the landscape continues to evolve pretty quickly. So to start us off, the first question will be around macro trends. So what macro trends are reshaping industrial real estate today? And which of them are you noticing having the most long-lasting impact on portfolio strategy? So Matthew, why don't we start off with you? So from your vantage point, leading a strategic innovation at Link, maybe you could kind of start us off with your perspective.
Yeah, there are many things happening in the ecosystem. I always start with like the customer-centered lens on, our tenants, the things that are affecting their world, and we live in this perhaps the most tumultuous time for supply chain, maybe in history, where we're in a time where literally, one TikTok will go out and someone's demand will go from 0 to 1 million overnight. For a single SKU, and then a month later there will be an influencer scandal, and that SKU will go to 0. And so this notion of demand planning in the way that our customers have thought about it in the past, where there's predictable seasonality, sort of supply chains that deliver to retail, accelerated by this e-commerce boom, are just being sort of like thrown into a blender, and so. I think that and the sort of insatiable need for speed of delivery of goods, where we were going from 1 week to 1 day, that's not enough. 1 hour may or may not be, but it's all signs point it to being a fairly insatiable. And both of those factors, when you peel it back to the real estate is one of the controllable ways that our customers can prepare for those things. There are many other things that they can do, but having this like surge capacity space or locating close to markets, we're just seeing those trends just pushing and pushing when we talk to our customers without like obvious end in sight.
Yeah, well, Barbara, so, on the operational side, what trends are you seeing specific, at Arden?
Tenants using space really differently. So if you look at just kind of the landscape, I think 80% of all of the leases being done are done under 50,000 square feet, and 99% of the businesses in the US economy are small businesses. They are a lot of new products, and people are able to start businesses out of their garage because they have some TikTok thing that goes viral. I think because of Amazon and Shopify, there's the ability for people to have product businesses that maybe they didn't have previously. Those businesses maybe start at their home, in their garage, they move to like a smaller space. So when I kind of think of like my world of real estate, I think it represents a pretty big piece of the market. I'm always fascinated by this because I've been in the light industrial side for almost 20 years. And a lot of people, I think when I started in this space, were like, well, what is multi-tenant industrial? I don't really understand what it is. And if you look at the universe of what it actually is, it's like 40% of the overall industrial market. And I think you typically think of what you might see for Prologis or Link Logistics, which is, when you're coming in on an airplane and you look down and you see your logos on the building, the rooftops of those big industrial buildings. Like most people are thinking that for industrial. when the reality is like there's a big portion of the market, which is like business parks and these really kind of small multi-tenant industrial. The trends that are happening that are really interesting for small businesses is like, I get the benefit of really both sides, which is young, small companies that need space, which is great. And then also big companies that now need less space, and things that are happening there is like maybe a tenant that used to take 100,000 square feet now has things like, robotics, AI, 3D printing that allow them to use a lot less space in their footprint. And I also get the benefit of them. So I feel like, the space that we manage, I'm a big believer in, and it benefits, I think, from both sides. People are moving up into the space, but they're also shrinking down and reducing their real estate footprint.
Yeah, and we'll definitely get into the real estate footprint later on in the conversation. But in terms of Ray, on the venture investment side, what sort of new technologies are you seeing being deployed or or actively kind of being vetted, to address some of these pressures?
For sure. So the way that we look at the world from the ventures team is products that our customers would use inside our buildings, so a tenant solution, or products that Prologis would use. And there's a ton happening across both fronts. I think it's no surprise that warehouse automation has been a huge theme ever since, even before the pandemic. And we actually have this discussion at our investment committee meetings all the time. Do we invest in automation that's going to make it easier for our customers to use less space, right? Are we going to self-cannibalize our own business? The conclusion we always come to is, I think we have to, because if we don't,
they're going to come to my space.
These folks are going to do it, or exactly, we're going to lose the customer. Yeah. So we then hope to spin it as it's not that you need less space, but you can get more done with the same amount of space is usually what we're looking for. So one of the innovations that I'm seeing a lot of right now are flexible ASRS systems. These are the automated inventory management systems. And has any of you seen a traditional ASRS system before? Okay, someone in the back, love it. They are super inflexible, right? They're these basically bins that you have to create a whole interior superstructure for. And they're very expensive and they're very boutique. And once you've built it in that warehouse, you can't make any changes. And so as inventory needs change, SKUs come and go, or as we move away from a palleted system to a SKU-based system, how do we think about flexible automation within the building? That is a huge topic. And we actually just invested, this is very much a plug, but we just invested in a company called Unit AI, which we think will help with this move from palleted to SKU-based, which is really common with returns. And I would love it if we could spend some time talking about returns, because there's a big shift in how I think spaces will be used as we think about things coming into the warehouse and out of the warehouse. And then on the real estate side, how we're managing our footprint, I mean, just go into the expo hall, you'll see chock-a-block AI solution after the next, helping you reduce time in your entitlements process, in your permitting, in your legal review, in your development, in your design. It's touching every single aspect of the system. And then the final trend, and I promise I'll stop monologuing, is power. Our CEO has a really great tagline. He's like, it used to be location, location, location. And now it's location, location, energy, right? How are we getting power to these sites to help with these things like automation, with EV charging, solar and storage? Those are big trends that are hitting the space too.
That's fantastic. Yeah, we're definitely going to touch on more of that later on in the conversation. But Ryan, I'd like to bring you in because you're working with owners trying to identify and manage operational costs. And so from the operational side, how are you seeing owners rethink about how they manage assets because of some of the pressures that have been discussed?
Yeah, well, first off, extremely interesting and well detailed. I was enjoying being educated here myself. But we look at it more from a macro lens of what's happening with rates right now. We've seen a big transition from, hey, we're pure triple net. We don't care about what happens in the building until we decide to get somebody else in, to now we care about deferred maintenance. If we reduce OpEx by 1% to 3% or our CapEx, it actually has a huge impact on our NOI. So in addition to, adhering or making sure that your tenants are happy, which is a huge feat in itself. I mean, these are hardware projects at the end of the day. we look at it through the lens of, what can we do for these owners in order to make sure their P&Ls make sense, make sure they're not coming out of pocket for, crazy capital expenditures that wasn't, budgeted, because that type of stuff really throws off, a whole operational process at the end of the day. I think we were talking internally about, a roof replacement, right before this. So, we built our system ultimately to vertically integrate all of the data, centralize it, and then automate everything humanly possible. You named it a little bit earlier. Everybody's got an AI system doing X, Y, or Z. We're trying to marry those systems, centralize, and then create an environment where owners have transparency into their data to identify edge cases in addition to opportunities, which we'll get into in a little bit as well. I can't reiterate it enough. Data is very, very important, in the past 5 years. And if you're able to structure it and take advantage of it, there's a huge competitive advantage.
Yeah, we're definitely going to get into, on the net lease side, the more passive real estate investors and how that is definitely evolving to less passive. So one theme that keeps coming up is across the industry is the growing role of data. And historically, how a lot of investment decisions in industrial real estate were primarily driven by location and market fundamentals. But what we're seeing today is owners incorporating a much broader set of information, from logistics networks to tenant behavior to operational data. So we're going to pivot the question now onto owners and operators. How are owners and operators using technology data today to identify high potential markets and reduce investment risk? So, Matthew, I'll start with you.
Yeah, this is one of those in our process we identified as perhaps probably the biggest bet that we can make in terms of capabilities. We have like a startup-like team internally that's building a predictive analytics intelligence platform for this very purpose. And I think it's interesting because it comes with a lot of humility of like, we certainly are scaled players. We're in a lot of markets, see a lot of transactions, but I think getting our data in order is like not to be trivialized. We've made some good investments there. But we also think the notion of like that creates some kind of data moat is a little bit naive, Like just because we're big doesn't mean we're automatically have these protective boundaries around just data going into a database. We're focused much more on how we use that data. And it's a couple things that we prioritize. One is proprietary modeling. And so we could take very near adjacent inspiration of hedge funds and whatnot. What is the normal there is actually they own the models. And we're not saying we're becoming a hedge fund, but like if you squint and imagine a world where data is more available, it's more transparent, there's more of it, then the models actually become something that you really want to own and have your thesis areas and your point of view reflected. And then you really have to have a virtuous loop where if you have data and you have models, it's not very useful unless it flows through the people in your organization. Specifically when it comes to take a forward view on rents and value, our market officers, our investment officers, our property managers are constantly in the field collecting all kinds of information, data, some anecdotal, some very much like about a comp that they heard that is going to transact soon. And so we're trying to create tools that help them tell the story of their markets easier, so that they have a reason to input their stories and anecdotal data into our systems. That creates better models that helps them tell the story of their markets better. And so that loop is non-trivial, and I think that's humbly very early days, but we're not sitting on our laurels of just being we're big, and so we're going to have the most data.
Mm-hmm.
That's great.
It's fantastic. So Ray, from a venture perspective, where are you seeing the most interesting innovation around real estate data?
Yeah, I mean, I'll be the first to admit that we're still trying to figure out the data piece. We've been working on a data initiative for 6 years. I mean, we've gotten to a point where we think we have enough to start building programs, but this is the problem of our industry as I see it today, is data architecture. You have written forms of data in the form of leases, you have geospatial data, you have power line data. I mean, the list goes on. I love to cite that, your local city council meeting can go from 3 hours to 6 hours of just people talking, and you have to somehow parse out that information. But the good news is once you have that, right, and once you have it structured, you can really leverage those AI tools. One example that I love to give that will speak directly to how real estate owners can help reduce investment risk is we're currently investigating tools that will allow us to more accurately understand the local sentiment of a jurisdiction. So who are the folks that will be supportive of our projects? Who are the folks that may not be supportive of our projects, right? And how do we find the language with those local jurisdictions to help them find aligned incentives? You know, there's some zoning codes that don't even have use permits for EV charging hubs. How are we going to get an EV charging hub installed if the city doesn't even know what to call it? Right, so that's just one example, but I think that aligning the data realm for how you work with your vendors is a huge potential opportunity on the tech side.
Nice. So Barbara, so how does all of this actually translate into leasing, redevelopment, development, the capital allocations?
So I'm not doing any development. So typically, like when I think of our side of the business, we're buying existing product. We do put a lot of capital into, and I'll say like 10 to 20% of the purchase price is basically the capital we're going to put back in for capital improvements. And it's very like this product type has barely been built since like the late 80s, early 90s. We have a supply issue, which is great for us because tenants, it's highly in demand. There's limited supply. So if you own it, it's great. In fact, the other side of that is a lot of people, when they're exiting and selling it, this is not the highest and best use, and people are converting it to multifamily. I know there's a lot of multifamily folks in the room. So it makes it even more in demand. But when I look at like what we're doing, the capital improvement work that we're doing, whether it's just kind of beautifying an asset, it could be, it's your paving, your landscape, your painting, your signage. It makes it look a lot better. But that capital work has to be really organized somewhere. The other thing that we're doing is constantly taking a look at how do we make those spaces ready. So about a third of our rent roll is turning annually. So it's pretty aggressive. We have about short-term leases. I see you kind of questioning that. And so we are unlike the big box where those lease terms are 10 years. My lease term, my average, like weighted average lease term is just shy of 3 years. Mm-hmm. So these are very short leases. And so what does that mean operationally? It means I need a lot more tools, techs, systems in order to be really efficient there. So a third of my rent roll is turning every year. That's 300 to 400 leases. That is a lot of operational efficiencies. I need tools and systems in order to manage that. So we're using a lot of technology to make sure, like we talked about, I think someone mentioned, I think it was you, Ray, on like lease abstraction. Like everything we do, we have to do really efficiently. I have to have spaces ready. I have to minimize downtime as much as possible. And that's having like a make-ready spec and making sure that my contractors are really teed up and that work is happening. So I require a lot of tech and systems that are going to make sure that I have reduced downtime because I need to drive NOI. And so like a lot of tools that you have in your system are things that we're using. Maybe it's somewhere else. I think that the big cautionary tale that I have that I'm really focused on right now is there's a tech and a system for everything. I was in the exhibitor hall. I saw all of the AI things. It's overwhelming because the worst thing I can do is like come back to the company and be like, I've got it. I heard our problem on this and I'm gonna fix it. You're gonna have a better way to like handle your HVAC units or your roof or your paving. And we're gonna do this so much better and faster. And if I come back with that kind of enthusiasm and excitement, my people are just gonna like, oh my God, they can only take so many changes and implementations. I'm not a big Link or Prologis. I don't have a huge data analytics team that's kind of running all of this. I don't have implementation teams, so I don't know if that resonates with anyone in the room, but I don't have full departments for that. So if I'm gonna launch a new tech, it means everyone in the company is like all hands on board on getting it live and actually using it. What I've come to realize is we were really aggressive when we launched on technology, and we have a lot of tools that are being used at like 5% capacity. Like it's like things come up all the time and they're like, oh, I found this new tech and I'd like to use it. It's like, that's actually part of our ERD suite. So we have that, we're paying for it. We should probably use that. So I think for me, operationally, we have set a lot of those really great systems in place. We've got dedicated processes. We do a lot of training on it, but it's really important that we're leveraging the systems and tools that we have today, because I think we identified a lot of those little levers that we can move to drive NOI and reduce downtime in our spaces. So tech is a huge thing. It is really important that I don't get too ambitious on tech, because there's only so many systems people are willing to actually learn in their day-to-day job. So, which is why I like Yardi, because it has so many of those. It's like, okay, you're already in Yardi. This is just a different module within Yardi. We do bolt-on things beyond that, but that's a system that's been super effective because they have a lot of solutions that are pre-canned and we can tweak as needed.
So a follow-up question specific for you, since you mentioned that you have a number of leases, with 3 years of term left. From the owner-operator perspective, if you have a lens into knowing that maybe one of those tenants is not going to stay, right? They're not going to exercise that option, that they're going to be out the door. Are you looking at spending capital to make certain improvements to those buildings where your next replacement tenant is either going to demand that up front, or would you just build that into the next deal?
So we typically, it depends on the asset and it depends on how many vacancies we have, but typically I'm going to want to have, if let's just call it like small, medium, and large. Let's say I've got a, 5,000 square foot, 10,000 square foot, 20,000 square foot space. I need to have make-readies available in all of those. These tenants are pretty flexible. I'm not doing a lot of custom build outs. Like you guys might be doing more like with the systems that are within kind of the four walls. Within the four walls for the kind of industrial that I do is very simple. It's basically your first third is office. It's like a little kitchenette, a bathroom, and a couple office spaces. The back 2/3 is warehouse. It is that simple. So I don't need to do a lot. I just need to make it look nice. I need to paint, carpet, do the cabinets. We have a standard spec for that. We get, scale pricing. That's great. But I need to have available units in each kind of one of those size ranges that I know we're going to lease out. That's important. Those are our make readies, but we have kind of our originals too, that we don't make all of them ready. We can't afford to do all of them, but we definitely want to know when someone's coming up for renewal. And the beauty of, I think, our tenants is they can contract and expand with us. It's really easy to knock down a wall in our space. Again, it's not fancy space. They don't have a lot of custom equipment that's in this space, so it makes that pretty easy. So the tenants, ideally, if we are really integrating and talking to our customers, and I know Link always uses that word really well. You can't get me off of tenant, but they're our customers for sure. But if we're really focused on our customers and our property management team is in it, constantly communicating with them, they're going to know hey, there's a lot less car and truck traffic in their parking lot. I'm going to go see what's going on. And you might find out your tenant is, in trouble and there's something coming. Now we kind of have, an idea. Can we move you into a smaller space? Let's start talking about that. We'd rather move them into a smaller space than have them totally leave. We'd rather obviously expand them than have them go down the street somewhere else. So we really try to pay a lot of attention so that they're not just exiting and we're stuck with a space that really needs to, get upgraded. But yeah, we've upgraded a significant piece of our portfolio with standard make ready, so they're all in pretty good shape. And again, we have the ability to do that because a third of our, we've had the basic same portfolio, basically call it 5 years. So most of those have come up for renewal. So if someone has left, and they don't all leave, 75% of our tenants actually remain, even though the lease terms are really short. So this is kind of an interesting stat. Our lease terms are, typically 3 years, but the tenants usually stay 12 plus years. So they end up staying. So we don't always get that chance to make that space ready. But we do, when they are vacant, we kind of tee it up. We know it's kind of coming in the pipeline and we budget to make it ready. And that goes into the new deal, not the current deal, to your question.
That's great. So it wouldn't be a real estate technology show unless we're talking about AI. So beyond the buzz, the more interesting question is where AI is actually creating value in real estate operations and decisions making. So I'd like to get your perspective on where we are today and where you see the most practical applications now. So Ryan, I'm going to start with you because you're working directly with owners, implementing AI into operational workflows. So where are you seeing AI create the most value today?
It's a great question, and we're actually seeing it across the board, and it's accelerating at a crazy pace. I mean, we're seeing new technology roll out week after week after week. Our particular suite, we started with AI lease abstracts. We felt like that was important for our clients, and it took us a while to get it from 80% accurate to 90, then to 99. We're using AI now for certificates of insurance, where we're taking the EIN numbers and checking them with the brokerage houses and doing that dunning process back and forth. And so where we're seeing the most value as far as AI being implemented with our clients, it goes back to what I said before. What business process can we automate with AI? And can it adhere to the SLAs and the protocols and the approvals and the SOC compliance, of the client? We have a bunch of point solutions. You said you were overwhelmed. I tend to agree, and I'm very happy we took the approach of the platform play and being able to integrate all of that, but ultimately provide, that same level of service and AI capabilities. But we feel like in our world, at least, like the most important thing is the security, right? Like, what are you doing with the AI? What is it allowed to do? Can it actually query this information? And that's where we spent the majority of our focus, because if you get through that hurdle first, the opportunities are endless. And so first and foremost, security, SOC compliance. Can you do it? Can you do that in that vertical tech stack? And then how does it make your teams work better? Is the next logical step. And then eventually it's also, how does it provide a better experience for your clients, which are the tenants themselves?
Yeah, and I mean, at Fyxt, only since I now have deep knowledge of doing many iterations of demos, but you can customize, so what my needs are versus what, another client's needs are. So it's fully customizable where, if I needed specific data, I'm not kind of set in, what your platform is. I can have my custom modules and be able to pull in more information. So with all of your clients that, and customers that you have now, you're hearing from everyone what their needs are and kind of meeting them where they're at.
Yeah, we knew we needed to build extremely flexible. I mean, we hear it right here, right? 3 different strategies, 3 amazing companies and portfolios, all with, differentiators, right? In the way that they have their setup, their data architecture, everything's going to be a little bit different or very different, we'll see. So you need to adhere to that too. What we do is go in and understand what the goals and vision are of the client, from owner all the way down to operator, map out what that looks like over the time period that's appropriate for the client as well, and then set KPIs and work backwards, working hand in hand to deploy the AI that makes sense for that particular portfolio or user. Yeah. So we're not here trying to jam specific AI or functionality or features down anybody's throat. I think that the correct way to do it and utilize is to listen to who's looking for a solution, understand the problem, and then if you can tailor your AI to effectively fix that problem, you got something.
Yeah, it's fantastic. Matthew, I'm going to switch perspectives onto you, on the larger scale operations. How are you thinking about how AI is strategically, across the portfolio at Link?
Yeah, we're unsurprisingly looking for every corner with a, giving a light touch with the AI stick. I think my team focuses a little bit more on some of these sort of like hairier, perhaps more uncertain, but what we think as a result are higher payoff areas. And so there are some things that are just so obvious. It's a different part of our organization that sort of procures solutions that already exist, and there are many that are really great. And honestly, that the work to put those in the hands of our organization is ongoing for a long time. I think when I think about making big bets, I think one of the things, everything that we've heard at the conference all day and in general is important. One of the things that may go a little bit like unloved is the notion of like experimenting in places where there's organizational simplicity. And so we talk about like our portfolio is big. We have some big properties, small properties. The motion, leasing motion, for example, very different. Some of our smallest properties, left without technology, would probably take the same amount of manual work. And so there are these pockets where it's a clear problem. Like, everyone agrees that like we should do this differently, where you'll start to reinvent not just the technologies you use, but your processes, right? And so if you don't have enough organizational simplicity or alignment or just like these pockets, and they might not be the biggest part of our portfolio. I mean, smaller properties are a big part of our portfolio, but even if they weren't, some of the learnings there and the lessons of what works can scale as well. So the perfect opportunities are these places with organizational simplicity, where an experiment-based mindset, an approach that everyone's on the same page for, because there's so many solutions that we're heading into uncertain outcomes. But like finding that navigating path with technology and a process that scales is how we kind of see music through the noise.
Yeah, that's a good way to put it. Music through the noise.
There's a lot of noise. Yeah. We're working on the music part.
Yeah. Ray, from an investment perspective, where do you see the biggest long-term impact of AI and logistics real estate?
I'm going to provide some context, and then I promise I will answer that. So on the developer side, my understanding is that your IP is basically how you make decisions and how strong your relationships are. Okay, and then on the asset management side, it's again relationships and your proprietary data. AI is really good when it incorporates proprietary data and understands how you make decisions. So all those companies in the expo hall and anyone that is trying to sell you something on the AI side is going to be able to provide a tool that is 10x more powerful if you give it your proprietary data and if you tell it how you make decisions. Okay, the context there is that I think real estate owners today are highly reluctant to do this because it's effectively giving away a secret sauce, right? And that is definitely our position right now on a lot of different tools. So I actually wrote down what you just said, Matthew, because I love areas in organizational simplicity where the proprietary data might not be so proprietary, or the decision making is actually quite clear. Can we use it for those low-hanging fruits? And so, for example, I mentioned earlier, if you can have an LLM synthesize all of the city council meeting for the last 5 years and understand how sentiment has changed on trucking or noise pollution or any of these key things that solve permitting or entitlements risk, then you're not giving away any of your own proprietary data. You're not exactly telling it how you're making decisions. And so you can actually leverage tools like that. So where are the pockets in your process that allow you to keep your IP private, but still leverage the tools that solve this data architecture problem? And that's things like sentiment analysis and how you work with local utilities. I think it's designing and working with your vendors on the construction side. It's how might you plan for some of your capital management when you're thinking about upgrading assets. There are pockets here today that I think folks are going to get really excited about. And that's how I would have answered that question before mid-December 2025. Since then, with the rollout of Claude, Opus 4.5, and now the subsequent improvements on agentic systems, there's now the ability to actually not just use this as a decision-making tool, but actually export some of your decisions to those tools and say, using this reasoning, using this logic, go make decisions on my behalf. I think we are quite far away from that personally today, because that is what I think most real estate owners, asset owners, and developers do today, is make decisions within the context. The best part is with AI, you reduce your complexity by identifying all of the sources of data, which can help you lower risk and makes basically decisions faster. Okay, that was a lot of jargon. I think what I just would love everyone to walk away with, if they have one key learning from this point in particular, it's that you should be finding solutions that help you manage risk more effectively without giving away too much of your secret sauce.
That's fantastic. So we're coming up at time, so we're going to fast forward on a couple of our questions here. So we've talked about a lot of about technology, operations, but the buildings themselves are evolving as well. So tenant expectations around the automation, we talked about power capacity, sustainability, logistics efficiency are changing the way the industrial buildings are designed and operated. So as tenant needs and technology evolve rapidly, how the industrial spaces are being designed and operated to remaining flexible, efficient, and resilient over the long term. So Ray, how are the needs of around power and automation and sustainability, how are those actually influencing how industrial buildings are being designed?
For sure. First and foremost, it's site selection. So again, it used to be location, location, location. Now it's location, location, energy. We might find a location somewhere outside of our normal geos if it has excellent power capacity. We also at Prologis are starting to build data centers, so AI hyperscale data centers, which, I mean, that is the first and foremost thing. If you can't deliver power, you can't even deliver the building. But on the warehouse side, we're seeing increased needs for power for that warehouse automation that I talked about, for things like charging EV trucks. Power has become a fundamental component to this system, and the stronger your relationship with those utilities and your ability to find power capacity, I think will open up a lot of opportunities within your land bank and even conversion opportunities too. We converted a warehouse in the Chicago region. It was about 150,000 square feet to a 75 megawatt data center. And has anyone done a warehouse to data center conversion here? Okay, orders of magnitude IRR shifts. It is like eye-wateringly incredible. So I would just encourage everyone here to think about how are you procuring power and how is that going to change your strategy as an owner?
All right, since we're coming up on time, I have one last question. So if we fast forward 5 years, what will separate industrial portfolios that truly broke boundaries versus those that simply kept pace? So I will just open that up to the panel of whoever would like to take that first. Oh, you have a smile on your face.
I mean, like operational excellence. You've got to be a great operator. You can use AI to your benefit, but you still need to be a great operator. Someone's got to be thinking through and designing the AI that you need and how you use it. I do not think you can replace like the human interaction. And I love the idea of like being more efficient, leveraging AI, but a good operator is interacting with their tenant, understanding their needs, and not just from like what the data is telling me what their needs are, but like because we're humans and we're interacting with each other and I kind of know them and what their goals are. So that's never going away. Being a great operator really requires the human touch. So I love the embracing of AI, but we have to talk to our tenants at all times. That's really important.
We're of the belief that AI is for everything else. I mean, the human interaction, the relationship is what, is the staple of your business. It differentiates you. So, you made a great point before, what can you put in a box and, tell it what to do and then ultimately let it automate. But back to the question, I think if you're doing what these folks are doing, which is being proactive, your finger to the pulse, understanding what's out there, setting yourself up for success and then continuing to foster the relationships that you guys have so successfully built, those are the winners in the space. There'll be consolidation, there'll be longer hold periods, there'll be shifts, but true believer in that.
That resonates. I mean, I think we're going really big on intelligence. We talked a lot about that, but it does beg the question of what does good service look like? Not just good buildings, but good service look like in the era of intelligence. And I think it's not like a hotel where we can leave a cookie on your doormat the day before, and that like delight as a service principle is like maybe secondary, but being transparent, being predictable, being fair, turning your spaces quickly, being easy to deal with, and then having a human element that is human. Like there's something there around actually good service is just like kind of disciplined execution, which is heartening to me because that's what real estate is good at.
I just want to say thank you to our wonderful panel for sharing their amazing insights. A round of applause for our panel, please.
Thank you.